Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin and we're going to provide an update on the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Link is in the description below. Make sure you check that out. We have the website, thousands of different charts for different cryptocurrencies. I know I mostly just talk about Bitcoin and Ethereum and a few of the altcoins, but we have charts for all sorts of altcoins on the website. In this video, we're going to go through, where we stand with the 20-week SMA. Do note that I believe after 8 green weeks, not that it really matters, but we do have a red week. So we did get a pullback. And we talked about that, I believe, a week or two ago, that oftentimes after getting a string of 7 or 8 green weeks, you will see at least a pullback. Whether it turns to something more than that, we'll have to see. But right now, the 20-week SMA is currently at around 32,400. The 21-week EMA is around 34,300. So pretty wide range, about a $2,000 range there in terms of the spread on the 20-week SMA and the 21-week EMA. But what I like to look at is the extension from it. So we did get a pullback. So if you were to go look at, say, the short-term bubble risk on this, which is the extension from the 20-week moving average, we talked about this previously, we first got that move up to the same extension that we got back in January and in February. That's where the extension went to in November. And then the extension above the 20-week that we just saw reached the same level that it was in March, right? So we pointed this out last week and we said, look, this is the same extension from the 20-week SMA that we reached back in March, and we could be due for a pullback. And this past week, we at least did see Bitcoin pull back about 5 to 6%. Now, I will say again, even if you pull up if we pull up the short-term bubble risk, even though the extension from the 20-week topped out on the week of March 13th, do note that while we did get a red week following that, and then a couple of green weeks that went nowhere, we did finally get one last pop up before fading back down to the bull market support band, right? So we had a strong move up, red week, do nothing for a couple of weeks, and then another 7% move to the upside. Now, is it going to repeat in the same way? Probably not. This was an 8-week stretch of green. This was just a single massive green candle. This candle here was about a 28% move. None of these candles over here were a 28% move, but all in all, it was a much larger move than that. If you were to take it from where it began, it ended up being about a 64% move. But the point is that over here, it sort of just calmed down for about 3 weeks. We got one final pump. Trying to think about what that would look like this time. If it were to play out in the same way, probably won't, right? It probably won't play out the same way. But if it did, it would essentially mean, I guess, the next couple of weeks flat, and then the first week of January getting one more pop, which could correspond to the whole spot ETF stuff. But and a 7% move higher from the current levels would basically put you back at where we were previously, back at around 44K. But it is an interesting chart to watch because we've seen sort of this extension from the 20-week moving average hit these key levels a couple of times here. Right. And you could actually extend this back all the way to 2021 and see that it almost lines up there as well. Right. So like the extension in late 2021, that first pump got close to that same levels that we've been seeing over here. And then that second pump above the 20-week SMA that came in October, which also preceded the final high. Right. It came in October and then the final high was in November. This one came in March, and then we had the final local top before going in sort of a summer lull where we didn't go anywhere. Same type of thing. So interesting pattern to look at, especially to see if it ends up playing out once again. But you can see that the last time we reached, broader extension from the 20-week moving average, where we were like 100% above the 20-week SMA, you'd have to go all the way back to late 2020 or early 2021. So it has been quite a long time since that happened. And another way to visualize this is to look at the price over the natural log of the price over the 20-week moving average. And if you look at it like that, what you'll see is sort of a nice trend line here that we talked about back in 2021 as marking a local top, simply because that was kind of the trend line that we had hit so many times in the prior bull markets. And going into the summer 2021, we had a video saying, all right, likely going to have a summer lull. We got to cool off from this thing. Now, some people ask, well, can we reach that same level here? Anything's possible, but do note in the pre-halving year of 2019, we were unable to reach it, right? It took another, a year and a half or so before we reached that full extension. And so in order to reach it, Bitcoin would have to rally up a significant amount to get back above that level. And I mean, you can even see that the extension from the 20-week SMA measured this way, the natural log of the price over the 20-week SMA. I mean, you can see that it essentially topped out. The extension from that 20-week moving average basically topped out at the same spot it did back in March. So interesting how while the prices are different, the levels, the extension from the 20-week have remained fairly constant in all of these moves so far. So something to continue to sort of think about. In terms of other things that we could look at, we could always take a look back at the regression rainbow and kind of see where we are. I mean, we basically just spent the entire year, if not more, in the same regression band. Note that the top of the regression band right now sits at around 47.5K. The bottom of this regression band sits at around 27K, right? 27.3K. So those are levels to look at. And I mean, it's also important to think about 27K and 47.5K. They're also important confluence in other aspects as well. For instance, the 100-week SMA is right around 28K, right? That's where it is. And maybe that's not relevant to you, but it is notable that in at least in the first part of the halving year, last cycle, we pulled back to the 100-week moving average, right? Just like we did in 2016 as well, and just like we did over here at the very end of the pre-halving year, and sort of we took off from it in the early part of the halving year, right? But in all cases, we sort of we revisited that 100-week moving average late pre-halving year or early halving year. I'm not suggesting that it has to happen, but if it does happen, no one should be surprised, right? I'm not trying to say that anything has to happen, right? We have to be clear about that. Seasonality never has to happen. We've covered seasonality on the channel a number of times, and it seems to work out about 70% of the time. The other 30% of the time, when we talk about seasonality, it doesn't play out, and then people will be like, well, but you said, look, seasonality, it does not always happen. It tends to happen, and so because it does tend to happen, it's important to consider that. It's the same thing when you think about the 20-week SMA, like the bull market support band. Every single Q3 of every pre-halving year, we've fallen below it, right? We fell below it here. We fell below it right here. This was Q3 of the pre-halving year. Q3 of the pre-halving year over here, we fell below it. And then again, this past year, Q3 of the pre-halving year, we fell below it. And so, and a lot of people over here did not think we would, right? So you have to remember, I mean, it doesn't always play out, but oftentimes it does. And so there's that confluence at around that 28K level, which also happens to correspond loosely with these prior highs. It would be just below those prior highs. So think about 31K. Imagine if we went below that, you went to 28K, that would correspond to the lower part of the regression band. And then the upper part of this regression band, which is around 47K, happens, coincidentally enough, to correspond to the 618, right? If you take the fib retracement tool here and you go all the way up to the 618, that's exactly where that turns out to be, is right there at that regression band. And you might say, well, what's so special about the 618? Well, the reason it's relevant, at least loosely, is because if you take the extension, if you look at the fib retracement tool over here, you can see that that's exactly where Bitcoin rallied to, was in fact the 618. And we also have to think about, why did Bitcoin top out at the 618 over here? And does it have to top out at the 618 here? No guarantee we make it there, and no guarantee that if we do make it there, it stops there. But the reason why it's interesting to think about is if you look at interest rates Bitcoin topped out just before the Fed started to cut rates, right? And it's almost like, could that happen again, right? I mean, you can see that it went to the top of this regression band just before the Fed started to cut. So, well, are we going to see something similar play out where it goes to the top of that regression band just before the Fed starts to cut? Or maybe or maybe it doesn't make it there. But if it does make it up there to that 47, 48K level, and again, I was talking about this, the other day on the no shill zone with Gareth, and he's saying, well, like a lot of people are calling for it, so maybe it won't actually happen. I don't know, right? I really don't know if we'll make it that high or not. As I previously said, my expectations have already been exceeded this year because I was sort of thinking, 35K would sort of mark the limits for Bitcoin this year, but we've exceeded that, and I've learned in the past when it exceeds your limits, like it's kind of foolish to just move the goalpost, just kind of get out of the way and let it go however high it's going to go. But just looking for for areas that have been resistance levels in the past and various confluence. And that's what we look for, right? So the upper part of the regression band happens to correspond to the 618. And so if we do make it there, it would be important to think about where are we in terms of rate cuts? Are we starting to see those rate cuts come in just like we did, about 4 years ago? And if we don't make it there, or if we pull back down, do we go back to the 100-week moving average, which is exactly where we pulled back to right here in late December of the pre-halving year, early part of the halving year. That's where we pulled back to. Now, over there, we ended up getting a recession. We got a hard landing, and we went a full regression band below that, right? So if we were to go a full regression band below this, it would mean going all the way down here. Right? If you draw a line right here across the page, that's where it would correspond to basically the prior lows. So it all really depends on if we get a hard landing or not, and that depends on if the Fed starts to cut sooner rather than later. Because again, a lot of people are celebrating a soft landing and saying that the Fed's accomplished everything they needed to, and inflation is heading where it needs to be. But this is the riskiest time. Like, we're entering into the riskiest time where we could see the uninversion of the yield curve as the Fed starts to cut. But you have to wonder, why is the Fed cutting? Maybe they're cutting to get ahead of all the lagged effects from all the rate hikes that we just had for the last 2 years. So that should be the narrative. That will likely be the narrative in 2024. Are people worrying about rate cuts as potentially the economy starts to finally slow down after 2 years of tighter monetary policy? And if they achieve if they achieve a soft landing, then you could see something like this, where we essentially hold the 100-week moving average as support, like in 2016. Or if they've gone too far, you could get a hard landing where you go back to the 100-week moving average and everyone hopes that it holds as support. And then, just kidding, hard landing arrives, recession arrives, the unemployment rate goes north of 4%, the Somme rule triggers and all that other good stuff. And then you get a hard landing down to the lower regression band. Right, and then you get sort of your retest, just like you got over here. So it really all comes down to a lot of it comes down to that, and how quickly is the Fed able to get things under control. So for me right now, I think the bigger risk is rapid disinflation over the reacceleration of inflation at this point, and I think that should be abundantly clear in the nature of the bond market recently. The bond market continues to show strength despite the advertised pivot by the Federal Reserve, suggesting that the bond market is more concerned about disinflation and the economy slowing down than it is about inflation reaccelerating, at least in the short term. That doesn't mean that inflation can't reaccelerate, a year from now or later on, but I think in the short term, the market is rightfully considered or more worried about disinflation leading to potential deflation. And we've already seen some deflation in some categories than it is anything else. But anyways, that's what I wanted most to talk about this week, where we are. And do note, I was looking at transaction fees, and normally, these spikes, as we get into these spikes, that becomes sort of a danger zone. So I'm not suggesting that that it can't go higher. It's just that a lot of times these spikes tend to correspond to some local highs. So, and especially if there is another pump going into the SPY ETF, and transaction fees are continuing to stay elevated like they were over here and over here, that could be a very high risk time, and just something to consider. Anyways, I suppose we'll wrap it up there. Thank you guys for tuning in. Again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Link is in the description below. We're just continuing to build out the website. And you also get access to 3 premium videos per week. I don't necessarily always talk about what you get with it, but you get the trading view indicators that I use on here with the pro, the highest plan, and then the website, 3 videos, and a few other things. So make sure you guys check that out. Links in the description below. And I'll see you guys next time. Bye.